Good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. And this is January 6, 2025. Wow, can you believe it? Look at a storm going through America. Even Chicago, I just looked out the window for the first time in a couple hours, and we probably have an inch of snow here, but that's nothing. Downstate, they're buried in Iowa, Missouri. It's all the way up through the East Coast, so enjoy it. It's winter. It's January 6th. What do you think you get? It's the cold that a lot of people are going to get bothered by because that's going to drift down even to South Florida, believe it or not. Now, you know, today what you woke up to was immediately the Washington Post coming out with more news about President-elect Trump, their story through their anonymous sources. I hate the word anonymous sources because it's like a way that papers hide. Is that he's wobbling and doesn't want to put across-the-board tariffs. Well, number one, I don't think he's going to do across-the-board tariffs on a lot of countries. All right. Number two, I think that China could be one of those that gets the across-the-board of 10%. Wouldn't surprise me. They're not getting along. Canada, been knocked out of the realm now. Justin Trudeau today, and I'm sure you heard that, stepped back, and he's now given up the head of his party. He's given up his premiership. He'll give them time to find somebody new, and then he'll step away from that. Is that because he didn't get along with President-elect Trump? The news wants you to believe that that's the case, that things did not go well when he went to Mar-a-Lago, and that the Trump administration and Trump himself wasn't treating him with due respect, whatever that might mean. I think it more has to do with the policies that he's embraced, immigration, inflation still out of trouble, not going the right way, ministers stepping out of his party. I think the final blow was Chrystia Freeland. And she may be your new prime minister before all said and done. She's got a pretty good resume, so you don't know. As for market news, one of us, me, probably had too much to drink last night, and I put the news together, and I put it backwards. So start at the bottom. At 7 in the morning, Richmond Fed President Barkin, he's going to be speaking. We get at 7:30 the November trade balance. We're going to get at 7:55 Red Book Group. The ISM is going to come out with their U.S. service sector indices for December at 9 o'clock. And we're going to get also at 9 the big report, the JOLTS report for the day. And that's labor turnover, jobs, and so on. And the market will study that. Later, I think Wednesday, we're going to get the FOMC minutes of the last meeting. And we have this week, as you know, the big jobs report coming out. You'll have others along the way, the ADP to Challenger, Gray, and so on. Keep in the back of your mind, the end of the week starts to really get crowded because markets aren't open on Thursday for observance of the death of President Carter. So big important day, and markets will be closed. Then we come back. We haven't had a full week of trade since Christmas, so it's just the way things are working out. All right. So let's take a look at what we've got on the charts and get a feel from there. In Dutch Brothers, that's what we were covering over the weekend. Charts still moving. This is called a vertical price rise. It happens when every single day that you start getting is making a higher high than the prior one. You could see how the market is working with it. Higher lows, higher highs on a swing line. And you held the 18-week average of closes, and you have finally come out of this sideways action. So is it a breakout? It certainly is of sorts. I think the trade would be a willing buyer probably at 53.69. You wouldn't want to see 51.70 taken out. Where's the resistance? You're at it. You're over the upper Bollinger Band. So that's that sideways action the market is trying to work with to see if it can maintain the bullish trend. What I don't like in the market is I don't like when you get overbought. Overbought is when either leg of the slow stochastic is over 80, all right? And you're knocking on the door of it. So very careful here at 79.39. Oracle still hasn't had a bounce. It's fighting a big battle at the 100-day average in green, and it might get to the 18, but that's its battleground. If it starts giving ground here and gets under the lows of Friday of 165.27, there's going to be little to stop it from reaching down for wherever the Bollinger Band comes in. Markets trade within Bollinger Bands 95% of the time, so that's where I would look for the short covering to kick in. In CrowdStrike and other software that is used to protect computers and the like, and this works with the government especially, we had a big down, but today was a day where you saw all the chip makers take off to the upside. A lot of it has to do with Jason Wong from, as you know, NVIDIA, and he was speaking today at the CES show, and tomorrow I understand we're supposed to get some guidance from him on NVIDIA. So what's he going to say? How the new chip shipping? What's going on there? Where do we think it's going? You know, they have such a big lead still on the market. We'll see. Everybody writes stories as to how people are going to get away from that type of chip and go to other types that'll do things. We'll see. I'm not saying it's not true. We'll see. That's all I can say. On Rivian, you got over the Bollinger Band on Friday, right back into it today. And as I said, this market knocked everybody out. I don't know why it dropped down this much on Thursday, but it was just before the numbers came out of how many car deliveries they did, and they were a blowout to the upside, and I covered that over the weekend, explaining that now what they've got going is that shortage of parts. It was something wound with copper. They've gotten all of them they need, and now they're back in the full production. So this is good. Even Lucid produced more cars than they thought. And Lucid's not a big car producer, but with the Saudi money behind them, they could become a very important one. K-Web, lower highs, lower lows. I still don't buy and believe anything China says at this point. Fully embedded reading, bearish, and you're just getting now a bearish crossover. The 18 just closed under the 100-day average, and you're making new lows in the process. Toll Brothers, you know, interest rates keep climbing. You're back to 4.61, 4.62, basically in that zone. In the 10-year note, it weighs on mortgages, 7.1 for a standard 30-year fixed, 7.3 or something. For the jumbos, that's an awful big number right now, and that's what you're facing right here. It's not that the people don't want to buy houses, but when you get to the higher ones, do they really need the mortgage, some of these people? It's that you're just not getting the action overall yet in the market. We have not solved the shortage, though. In the home builders themselves, you can see the sideways action here. Lose the embedded reading, and I'll say, hey, maybe the market's making a bottom in front of the spring, and then I will get excited about the builders. We've got to see that happen. It's not a zone that I'd want to get aggressive now on the short side. In XLF, when I look at the financial services sector, again, high interest rates have been breaking this market down, breaking it, not making the market go up, which is interesting. Take a look at how the XLI is doing. You lost the bullish embedded reading. I would think this market could try to rally back to the 18-day average at any point here. On the energies, they had a nice number today. They got up to the highest that they've been since mid-December, and all of a sudden they finished the day and couldn't hold on to the gains. In the gold market, you're stuck. You've been trading against the 100-day average. You finally lifted up on Thursday and Friday to the 18, and now you're back down, just fighting a battle, back and forth, looking for direction. Same in SLV. Look at how it picked up right into the resistance of the 200 and the 18-day average. I don't see a trend here. I see you out of a downtrend, but I don't see an uptrend having begun. And in the copper market, with the Trump talk, you lifted copper prices everywhere. But again, all it did is get to that 18-week average of closes, and it suddenly ran out of momentum. In BND, lower highs, lower lows. Again, higher interest rates, the killer here. And in the dollar index, well, lower those numbers on tariffs and don't do them, dollar loses a bid and the euro gets one. That's pretty much what was going on today. You know, I cover this and just so much more every morning in my jumbo package. So let me explain how that works. I start off doing this at 6 in the morning in the futures markets. We start recording, takes maybe 15, 20 minutes, gets done, and I post it on the website and do order there. It has to process itself. They're on your member login area, but this is how the charts look. They're very different than what you're seeing here. Colors are different, but I add more features on these. And we'll cover the daily and the weekly charts in this. We're looking for trades that can be made with risk factors that either have momentum behind them, dollar risk that makes sense, setups, and so on. Then we cover 40 charts at 9 o'clock on the SPDR ETF. I like to let the first half hour in SPDRs and ETFs get into the market, because in the aftermarket trade, you've got to blend everything in, and that's pretty much what happens. Plus, the news ends, as you just saw, typically around 9 in the morning, a lot of the news. So that's what you want, and I'm dealing in Central Time. Go to iraepstein.com. It's all laid out for you there. Move your cursor to the top here. You can play with it that way as well. In the meantime, I'm Ira. You have yourself a great evening. I'll catch up with one and all first thing in the morning. Take care.